Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. You've probably heard me talking about trading with confidence, and honestly, it's a lot easier when you're not risking your own money. That's why I wanted to mention Blue Guardian. They offer instant funding or a challenge to get you started, and up to $400k in funding, weekly payouts, and a 90% profit split, and they've already paid out over 15 million to traders around the world. Plus, they're sponsoring Birmingham City FC and Chris Eubank Jr., so you know they're serious about backing performance. Check them out at blueguardian.com or check the link in the description.
What's going on, guys? This is Brinks Trades coming to you live with another week of breakdowns. Hope everybody is doing well. So we got about 3 people on the call right now. I'm gonna go ahead and make this a bit smaller so you guys can't are not just looking in my head. Trading view. But hope everybody's having a great week. Hope everybody had a great trading week. I have couple of updates for you guys, and then we'll go ahead and get into the charts. The first thing that I want to share is, I think officially I talked about this last week, but I do want to share the kind of the results of one of the FTMO challenges that I have taken. Drum roll please. Did I blow it? Did I pass it? We'll see what's going on in a second as soon as I get the screen up. But again, if you guys this is your first time hopping on the call, my name is Brinks Trades, aka Blake, and I am a day trader with a decade of experience. I first started trading back in 2015 for the Brexit 2015, 2016 time frame, and it's been about a really interesting 10 years of me doing this and really getting a skill set built. And I'd say I found probably my traction in my niche as a trader about 4 years ago. 4 years, about 5 years ago at this point. And it's been a really crazy journey ever since. And so it took me some time to get profitable. Once I got there, it's definitely awesome. So again, one of the things that I do for the Trading Up podcast is I come on here every week as the resident indices analyst and break down charts for everybody. And it's been a partnership the last 2 years. Cam's been a really awesome person to come on here and do these accounts with. So you're either watching this on my channel or you're watching this directly on the Trading Nut pod. But yeah, let's talk a little bit about FTMO, and then we'll go ahead and get into some charts. So as I talked about last week, I just wanted to, again, one of the things that I do when I trade is I want to be able to give a authentic look at where I'm at with my trading and where I'm at with and what it takes to really do this on a day in and day out basis, right? So I've done account challenges where I've grown my account, right? With my real personal capital. And right now, and over the next few months, I'm back at the process of trying to grow my CFD, or I guess currency prop firms again. So FTMO obviously is the leader in that space. At the beginning of the month, they just announced that they're back in the United States. So I'm happy that they're there. And they're obviously one of the leaders in the space. So the That's really, really good. So I basically was able to take a challenge with them. So I took 2 challenges. One, I'm in the verification. I talked about this last week. This is the verification for a second, for a 100K account. Phase 2. So I already passed the phase 1. As you can see, there was some drawdown on the account. I think I was not even drawdown. It's not even really drawdown. I was now like $400 in the account. And so it looks crazy, but this is really just $400. So I took one trade, lost it, and then came back. And so that was the first trade. The second trade, or the second account, is officially technically passed. This is the verification for phase 2. I was able to maintain everything. I did have some crazy drawdown. Again, I told my students, and I've been telling my community that, my approach with these accounts was really to be as aggressive as possible, right? And then once I get funded, manage things out properly, right? And so I was able to pass this challenge actually officially, right? And if we talk about verifications, I don't want to show everybody my entire back office here, but when we talk about verifications and what I was able to do, what I was able to gets basically proof, right? For passing this whole thing, I was able to put the certificate in my Discord, which is the Talented 10th. Again, we'll talk about that in a second, but pass verification, right? So this is an actual authentic thing. Scan that, it'll take you to FTMO's website, right? And you can see for real that obviously it's passed. So 100K that's in funding for FTMO. Again, I know you can get maxed out with 400K, so that's going to be my goal. I have a list of prop firms that I'm going to be targeting for the CFD side, or CFD. I keep saying CFD. The currency space that I'm going to be tackling over the next a few months to a year. My goal is to get funded, somewhere between $2 and $3 million across all of these firms. And so once that happens, I'll be able to obviously grow, trade those accounts, simultaneously and have decent profits across all of them, right? I'm really looking to grow and scale my personal capital or profits, that I can obviously use for my personal capital or use for other things too. So I'm really excited about that. But yeah, this is, the first phase in that chapter. So 100K, obviously, as I get more and more accounts underneath me, the challenges will start getting bigger and bigger. So right now I'm taking 100K accounts. But once I probably pass the second one, then, the small, so I'll probably get up to this 200K account, right? And so really growing that capital so I can, as quickly as possible, get to the funded phases. And then, once I get there, obviously manage these accounts with some degree of consistent risk management, small risk management, right? And so I tell my students this all the time. I'm gonna give away a little funded game for free, but I tell everybody that when it comes to the funded accounts, if you're trading like a 100K account, right, on the CFD side or the currency side, they are going to give you about 10% of your risk, right, as a standing drawdown. And usually that's like 10,000 on 100K. You can lose about 5K on a single position or in a single day, right? So 10K overall, 5K in a given day. And so for me, I'm only trying to risk about 0.5% per account. So if I'm trading on a 100K account, I'm only risking $500 at the max, but most likely somewhere between the $350 and $400 per position, right? And what that does is it just gives you more chances to basically go through, survive a losing streak. And I think the thing about traders, they don't really treat these accounts like you're actually trading for a prop firm, right? They're treating these like something to gamble away. Like, how quickly can I make this money, right? And I would say that's not a good strategy. And when you're dealing with a firm like FTMO, right, they have a lot of resources. They bought a broker, they have a hedge fund that's been acquired, right? So they actually have things that you can take for your personal trading and actually make this a full-time career, right? And that's obviously not a plug for FTMO, but just in general, I think this is where the prop space is heading, right? So when we talk about prop, when we talk about like where this industry is probably heading, it's probably heading to the space where all of these prop firms will have some type of hedge fund. They might even own their own brokers at some point, like FTMO does, but they all will have some type of hedge fund that you can tie your personal accounts that you're taking in these simulated funded accounts prior to real capital, right? And so for me, I want to, my dream is to really either A, own a hedge fund one day, or B, work for one, right, as a trader, right? I've been doing this for that long. I want to get to the, professional ranks where I can, do that. And again, who knows where the prop firm space will be a decade from now. I'm hoping it's here to stay, right? Like it was, like I think it is, but anything can happen, right? And so I want to be able to be able to trade my own capital in a lot of positions, right? Like we're talking being able to risk $5, 10, $20,000 in a position in a trade, right? On a regular basis safely, or be able to work for a fund with millions of dollars or billions of dollars to their name that I could actually take positions on and do my thing, right? So, or on my own fund, right? So either way, so one of those things, but and that all starts with building a track record, and that all starts with you being able to do this. This industry is amazing, especially if you read, outside of these social media traders, when you actually get to people who are doing this for real, and this is actually day to day. This industry has endless opportunity, right? So and you can really do some crazy things in this space. So let's talk a little bit about the charts. Hopefully everybody can see my screen. Should be able to see my screen. So let's talk a little bit about the charts. So again, over the past couple of weeks, there's been, let me see if this is the right one. Yep, this is what I want to see. So there's been a ton of dollar analysis that's gone into this. So again, you guys know I start with dollar, and I say this every week because if you understand where dollar's going, you can get a really good understanding of the overall picture in the charts. And so I saw that the market had broken structure here coming into last week. So I said I wanted to see potentially the market maybe trade back into this fair value gap, test this, and then eventually, fall back in line with this overall trend that we're seeing here. And so far we're kind of moving towards that. So you can see here that we started the week, we started last Friday, we're trading back into this overall fair value gap, dipped into the second one here, have really started wicking off of this range here. And pretty much this last week was just, a lot of consolidation in the markets once we dipped back in this range. We did dip into this gap, pretty much trade to the low end of it, it turned around and dipped into this and then went lower. If I jump down to a 4-hour chart, there's not a whole lot of price action here. I mean, we started the week here. Technically, we ended the week bearish, right? We started the week here and then ended here. So it was a bearish week, but there's just a lot of chop as we're trading in this. So what do I want to see over the next few weeks? I want to see the market continue. Honestly, I mean, long term, I do think the market will go down, right? I do think the market will go down. I do think that the market, it did technically trade up into this trend line liquidity there. So it could be ready to go lower, right? I would like to see this run a little bit higher, maybe take out this high here and then go lower. But overall, we're still bearish. We are still bearish on dollars. So I don't want to really take too many, like really go crazy with the long opportunities here. Stuff I do like though is we did sweep this low, right? We did take out this liquidity here at 95.90 and then trade all the way back in here, completely mitigating this. So to me, this long sweep of liquidity that we had 2 weeks ago is just really setting it up for a bullish move higher in alignment with a lot of this liquidity that's sitting up here, right? So I would like to see the markets really run up into this gap and really fully mitigated it. It did back in the beginning of or the later or mid-August, I believe this is. But I would like to see us kind of run this and then go higher and go lower still. So we'll see what happens. I'm going to stick to that bias for now. I would say that if we fully, this is kind of my like fail-safe level. Every idea that I generate, right? Every idea that I have, I come up with a fail-safe level. And just the level that says like, if we take out this level, this idea is probably no longer valid. Again, I'm just going to say this level right here sitting at 96.8 is probably the fail-safe level. Again, I do want to see the market go down over time, right? I still am very bearish on dollar. I just think we're going to have a short-term correction, right? And so if we take out this low right here, this idea of getting up here and then going lower is probably invalid, and we probably would just keep running lower. So that's what I'm going to be watching, especially after the last few weeks when we started wicking off of this. So if we invert this fair value gap, and really if we break structure here, then I'm going to be back to the bearish bias. And technically, I've never really abandoned bearishness. I just see all of this area as an area that we could get hit before we go bearish again. But sometimes the market doesn't give you the exact pullback level that you think it's going to go to, right? So you got to deal with that. But again, this level here is where I'm really looking at, and we probably will have a great understanding of that if we invert this last fair value gap right there. So that's stuff I'll be watching. Again, my ideas when it comes to trading is something that it's not. I know that you're never going to be 100% when you predict these things. And your overall projections, obviously I'm taking trade positions on smaller time frames in this, so I'm never just entering off the daily, right? And so I'm always looking for smaller setups, and because the way the markets work, sometimes you might have an overall projection that doesn't work, and it doesn't even present your trade setup to get in on the smaller time frames, so you don't even take the trade that or experience the would-be loss, right? So there's other times where you're going to get the overall direction wrong, but the trade setup is good, right? And so, and again, you have a winning trade, and your overall projection is off. So there's a lot that goes into this. And so again, if you're managing your risk and you're managing these trades in the small time frames, it's the most important thing. I'm going to jump to Euro USD, but again, if you guys have questions while I'm doing this, feel free to jump in the chat and then hop in with those. I'm going to make actually me a little bit smaller so you guys can see a bigger screen. Let's talk about Euro. Let's talk about a little bit about Euro. Again, if we're leaning with this idea that dollar is going to go higher before it goes lower, obviously Euro is the opposite. So we want to think about the idea of Euro going higher before it goes lower, right? And so, I'm sorry, higher. Yeah, lower before it goes higher. That's what I'm saying. So obviously I don't trade dollar, right? Dollar is just a chart that I analyze and gives me a barometer for where I think the market's going to go. But we're overall sticking with this idea here that the market wants to keep going lower, right? And so what we're seeing here is, again, I wanted to see the market maybe potentially trade into this fair value gap or even this one and then go lower. And that was kind of the idea here. And so far we actually have not gotten a great really breaking structure on Euro to keep going lower. If I'm looking at where we're at now, this is consolidation, right? We wicked down here, we wicked up here into the secondary gap. And we've just been consolidating all week. This is not really great price action that we see this last week, but this happens, right? When the market needs to consolidate contracts, you see stuff like that. So again, whenever you see consolidation, if you jump to a higher time frame, it usually gives you a better picture of what's going on. So you see all these wicks out of this fair value gap here, and this looks very similar to like if I go to the 4-hour, you can almost see this as let's jump back up. I don't want to say like head and shoulders, but you can start to see that the market was trading up, made a high, has been trading lower on the way down. And so that's a really good sign. I do like a couple of things here. If this is going to be the high, right, then us respecting consequent encroachment this week is going to be key, right? So I am going to draw this level out here and say daily level, daily wick CE. I do want to see this continue to go lower, but right now, since the consolidation is happening, you got to be a little careful. And there's nothing really here that's giving me, other than us rejecting from this fair value gap, which is a great sign. There's no like 4-hour breaking structure. There's no lower time frame, breaks that we can use to say, okay, this is 100% going down. It could just run right through this high. I would like to think it's not because of all these wicks, right? We have 1 day, 2 days, 3 days, 4 days, pretty much the entire week we spent wicking off of this. Also, noticing here that we did not close above this initial high here, right? So this is a really good sign. I think the market's going to keep on lower, right? So that's what I would like to see is us get some type of rejection and then go lower. Obviously, my students know the rules when it comes to fair value gaps, and there's multiple in the range, how we should be expecting this and projecting this. So I guess my idea is still valid unless we really close above this high here at 1.1820. So that's what I'll be looking for to see us maintain this. And and find some level of breaking structure to go lower, right? So that's what I'm seeing on euro. I actually like euro. Euro's a little bit more clear to me than dollar is on the daily. So right now, it's painting a little bit better context and picture to what's going on there. Let's look at GBP. GBP might give us something similar or different. It's very similar, right? It's just there's a little variance here. It's not as clean as euro is. I jump to the 4-hour time frame. You can see here that we did really break structure fully on the 4-hour, which is a little bit different than what we're seeing on euro. Euro was more consolidation. This is a very clean, very easy to see breaking structure. We did trade back up to consequent encroachment of this wick or of this fair value gap here. So ideally, I do want us to keep on lower, right? Obviously in alignment with where euro's at. Let's see. Waiting on this to load. The daily is not as clean. The rejections aren't nearly as clean. So that initial high that was set here obviously has been violated as the price closes higher and higher. We are still getting rejections from here. There is this big fair value gap up here that the market could want to run to, as well as the secondary one here again. So to be honest, I think the market is going to keep going down. It's just not as clean of a setup as the euro situation is so far. So again, if I'm looking at these correlated assets, we know should move in the same direction. Ideally, I want to see the market go lower, continuing still. If this again is the high, right? If this right here is the high, then ideally the same thing here. Oops. Staying below this wick is a good idea. This consequent encroachment, right? Just a good sign that the market's going to want to respect that. I do also see some trendline liquidity building up here too. These highs are getting lower like that. So that's something to watch out for. But overall, so far, I still do like the bearishness. Again, I do want to make a disclaimer that I don't trade off the daily time frame or the higher time frames that I analyze. And I teach this to my students in my community, that we have a smaller checklist of things that we want to see before we hop into a trade, in accordance to a lot of things. So yeah, I'm not taking trades based on this. So I do like that though. And then going back to euro really quickly, I'll give away some pregame here. There is a really good trader by the name of Larry Williams. He is an older trader. He did his thing in like the 80s or in like 90s or something like that, like the 70s or something. I don't know. I think it was like the 80s or 90s. And he talks about market structure. Most people talk about market structure like this, where they are low, higher high, higher low, higher high, higher low, higher high, higher low, right? Breaking structure, right? This is free game, right? Anybody can see this online. You can learn about market structure in like 5 minutes online. He talks about market structure a little bit differently though. And he talks about this idea of like short-term highs, intermediate term highs, etc. And it's a good watch. If you've never heard about market structure kind of talked about in this range, but he kind of talks about the idea of a long-term high and initial term, and basically how these things should be violated and not respected. It's a very complex way of looking at market structure. It's good in consolidations like this to kind of understand what you're looking at, but it's not something you need to know. But if you want a little bit more knowledge, check it out. I'm pretty sure I've heard that like people like ICT kind of teach market structure in that same way too. But it's a good way to look at market structure outside of just your basic higher highs, higher lows. It's not needed, but it does provide a little context there. As far as like when you see markets in these kind of consolidation ranges where they're rejecting a high and what you should want to see from that. So what's Kelsey say? Yeah, EU was tripping all week. EU was tripping, bro. Honestly, I'm gonna be honest. I don't think I took a trade all week. No, it's not a lie. I lied. It's not a lie. I took a trade on euro, right? I was down and then I kind of brought it back to break even. I'm a little bit in profit, like $10 on that secondary account. I also got some an email from FTMO when I did pass my challenge, basically telling me that I have to change my aggressiveness on any other account that I take with them. So they have like a 1% rule, so I have to kind of manage that. So it kind of stopped me from like trading on the secondary account pretty much after Wednesday. There's also NFP that happened on Friday, so I just kind of figured this was not a great day. So that message that I got from FTMO again is going to change the way that I probably trade the rest of these accounts. It's not really going to change the way that I trade the fundeds, but they would like me to manage my account and really stay within a 1% max risk drawdown at any given time. So, which is cool. That's what I plan on doing anyway. I plan on really staying below, honestly 0.9% risk in a given hour, a given day. But really, ideally, again, that like the 0.5% that I talked about is really the range that I'm going to stay in when it comes to risk. So for every 100K account, I'm only going to be risking about $400, right? Again, I don't want to have to go through these evaluations again. I don't want to have to blow an account, right? And so I want to make sure that I'm following rules and managing positions. And I think the money will come regardless, right? So like for me personally, I would rather, risk $500 or $400 or $350 per 100K account, get 2 million of those accounts. The next thing you know, I'm risking about $6,000 to $7,000 a trade, right? And making, with the opportunity to make like 14 grand a trade, right? It's one good trade, a week means that you're making $500,000 a year. And so I'm okay with that. I'm okay with risking very minimal and then just letting my account, do the heavy lifting in terms of like a lot of accounts to trade from. So that's me. That's what I like to see. I think that's how you trade overall, right? And that's what the strategy and the plan is. Are you going to lower your risk due to the government shutdown? Honestly, so yes and no. That's a really good question. I honestly haven't really thought about it too much. The reason that I haven't really thought about it is I'm not going to take any trades on NASDAQ. Most of my trades are going to be more based on Euro and GBP right now. NASDAQ is probably going to be tripping all week. It's probably going to be all over the place just because of everything. This affects some things, but it doesn't affect as much as you think it does when it comes to these businesses. Like any company that really relies on the government for things probably is going to be, tripping. But NASDAQ and the indices will probably see some type of craziness. If I was trading those specifically, I would lower my risk. I would definitely lower my risk. I would say that for me, looking at these currencies, I think I'll be okay. And then also, I don't really plan. I'm trying to figure out my strategy. Again, after getting that email from FTMO, I want to make sure that I'm compliant with everything that they're doing because I don't want to get one banned or I don't want my work to get, basically, or my trades to get voided out, right? When I take these positions, I want to be able to kind of build a great relationship with them and make sure that I'm good. So especially since, again, this is the best prop firm in the space and they, they are trying to do a lot of things and I mean, working for again, I want to work for a hedge fund. And if I'm working for either theirs or a different one, that's, that would be an awesome goal, right? They put the traders on salary, right? They, in addition to the profits they're making, right? So I want to definitely be able to build a great relationship with FTMO. And obviously all the other firms that I'm going to be funded with over the next few months and years. So my risk is already going to be low. But again, I'm trying to figure out if I'm even going to trade those accounts this week or if I'm going to wait a couple weeks and get entirely funded and then start trading. So I'm just trying to figure out what I'm doing, or max allocated, basically running up the 400K in funding that I can get with them and then do that. So so I'm still trying to figure that part out. But to answer your question, my risk is probably already going to be lower just because of where I'm at right now, just these accounts and the challenge that I'm taking. If I'm with a different firm and they don't have that 1% rule that they'd like to see me manage, then If it's a a demo account or a challenge account, I'm sorry, then the risk might still be on. I don't think it matters to me. But yeah, I mean, I don't think it's a bad idea to lower your risk. I mean, I'm not going to ever tell anybody to risk more. And anyways, I think people risk way too much as it is. Like these challenge accounts or these FTMO accounts, you guys are risking, like, you have a 50K account with 2K drawdown, and I'm seeing people risk like two contracts, 2, 3, 4, 5 contracts on NASDAQ with 2K of drawdown. I'm like, this is not going to end well for you. That's the thing too. And I would tell everybody who's taking these challenges, like, you shouldn't blow an account. Like, if you're managing your risk right and your strategy is good, you should probably not blow your account. So if you're blowing accounts consistently or you're running through a ton of challenges, it's probably because you either A, don't know your strategy like you think you do, or B, you probably are just not managing risk right. So let's go ahead and jump to NASDAQ really quickly. Let's see. I honestly have not looked at NASDAQ all week. I'm starting to get to the point where I'm really focused more on currencies again. And this is kind of the space that I'm in just right now. They're just kind of flowing better with my particular strategy. Doesn't mean that you can't trade them. I've taught, my students how to look at NASDAQ as well. But I think just for where I'm at right now and where my students are at, currencies are just easier to trade for them. So, and it just shows like there's more. A lot of these SMC concepts were actually made for. They were made for currencies first. A lot of people don't know that for some reason, but ICT and SMC, they started in this space first. Like currencies was where he cut his chops at, and then he moved over and started teaching people like indices about 3 or 4 years ago. So if you find a good setup on currencies, I mean, it's gold. You can make more money on the indices, but I mean, to me, I think once you start making more than like $5,000 to trade, I think you're in a good spot. Like I don't think a lot of people, if you can consistently pull that type of number, safely in, I don't think that really you can. I think you can live a pretty good life. So and currencies can provide that for you. So why not take the extra risk on if you don't know what you're doing? So either market works, right? It's just what you feel comfortable trading. So when it comes to NASDAQ, again, so there was a couple of things that we wanted to see. Again, I said I wanted to see potentially the market best case scenario, and it looks like this actually played out to a T. If you go back and watch last week's video, I said in Monday, I would love to see in a perfect world the market trade back down here, tap the high end of this fair value gap, and then go higher. And that's exactly what it gave us. If you look, you can see that the market traded pretty much into this fair value gap. And I bet that's like the first quadrant. Let me do this negatively. Yeah, well, just shy. Yep. So, but yeah, I said in that perfect scenario, I wanted to see the market trade into this retest this fair value gap and then go higher. Go watch the tape if you don't believe me. But that's where we're at. We pretty much had a great week where we set the low of the week on Wednesday, and then spent the rest of the week trading away from that. So that was a really great setup there. Again, I didn't take any of this. I have not been looking at NASDAQ recently at all, but that would have been an amazing setup. So we ended up taking out obviously the all-time high, which would have been our target, but that gave us a good 400 points of trading room. So that's a really good setup. And so when we're trading at these all-time highs, again, the only thing we can really do is just keep projecting to the high unless we see a crazy break in structure, right? So right now the market is trading back into this probably weekly, at least daily or weekly order block here, and trading back into this fair value gap. What do I want to see? Well, perfect scenario, I would love to see if we could run the low of Friday, stay in this gap, and then continue to take out this high. Now we did swing and take out the high of the day. And so ideally, we did have a 4-hour break in structure here too. So wouldn't be surprised if we did come up, run down, maybe even come back down here. I'm not going to project a long-term bearishness though, because we do have this order block here that we've traded into. So again, taking out the Friday's low here, would be probably a good setup. Maybe even consequent encroachment of this huge wick here. So right, so CE. CE. Right, so that's the first thing that I want to see here. Take out that low and then go higher. Again, I do want to note that we did take out the high, all-time high, and trade away from that on Friday. It's pretty typical normal action. Again, I talk to my students all the time about a TGIF setup or just a Friday setup that we're looking for, and so if you're familiar with that, obviously you probably have seen that before. But, we ran the high of last week, or ran the high of Thursday, and then traded back into the range to close the week out. So pretty solid week, actually, right? We can see the power 3 at play. We can see a lot of things. And so if you're one of the students in the mentorship group, you should be seeing that pretty clearly. So let's go to ES. Probably the same thing on ES. Let's see. ES looks like it's the same thing. We did trade above this. We stabbed up into this high, took out Thursday's high, and then traded back in the range on Friday. Jumping into the 4-hour time frame. I wonder what low was that for this week. Let's see if I got the pullback right for this week too. I said ideally the market would trade back down into this one last time. It didn't quite go as low as the fair value gap, but let me jump to the weekly and see if there's anything up there. Yeah, nothing crazy. Whatever. Okay, either way, we did get the overall direction right for the week, and we did run towards and take out our target, which would have been this all-time high here. So we did form a new all-time high. So what am I thinking here? Again, you don't want to jump in front of a falling knife. You gotta, if the market's gonna go down, it needs to show you that it's gonna go down drastically again, especially knowing that the ES and NASDAQ and all these indices are investment vehicles are supposed to go up over time, right? So I don't want to trade against that. So we are at this point where we did not technically break structure yet. The markets set an initial low here on Thursday, took out the high, traded against that. So we did see some bearish retracement to end the week, but we haven't gone any higher or lower than that. So what am I seeing? What do I want to see? Well, we are bearish, or we are bullish long term. So I do want to have the market find some level of liquidity that it can sweep and continue to go back up. I could see something like this. It's a couple levels, 3 levels actually. Right there, and then this overall low there. Tired, man. Tired to death. So ideally, best case scenario is potentially we start off the week running a little bit lower. I always love when the market trades and forms an all-time high, that the market will take out a area of sell side, whether it be this low here, this low there, or one of these two, and then go higher. So that's ideally what I want to see. I don't think I think any type of bearish action, even though this is a break-in structure, I think any type of bearish action should be faded. So I go, yeah. So ideally, that's what I want to see. Let's look at YM really quickly, and then I'll look at gold. And if anybody has any questions at all, we can talk about them. So I think YM is probably going to be the same thing. Yeah, this one's a little different because we set this initial high here, spiked above it. So we could be seeing a bearish week this week. It's just for me, it's hard to bet against bearishness on the indices because we know what the point is, purpose is. But that government shutdown piece that someone brought up earlier could be very much a thing, right? And so, so that is something to be aware of. It's crazy how every couple of months it seems like there's a reason for the government or there's a reason for the market to crash. So I'm gonna go bullish on this. If we're gonna maintain bullishness and kind of look at this with a bullish lens, I want to see the market do something like this, right? Trigger back into that range, and then take things higher. And so the target would be the all-time high. So this would be my buy side liquidity target at 47,323. 47,323 is the BSL target. So that's ideally what I want to see. Maybe the market runs that low. Maybe it even takes out the low there. So yeah, that's ideally what I would like to see. So I'll be looking at the target of 47,323 for the market to trade into. 46,969 is pullback level. We talk about gold. I don't think I want to look at gold. I'm sure it's probably crazy, but I know everybody asks about it. So let me pull that up right now. So we got about 13 people on the call. I wonder who's on the call and where they're calling in from. Yeah, gold is broken out of its range. It's going higher. Someone said that gold is projected to get to 6,000. And, if you are passively investing in gold, shout out to you. It's one of those assets that never really loses value. It just kind of goes up over time, especially in times of turbulence. It never really goes down once it hits a certain level or range. But ideally, we had 3 wicks downside. So let me look at the weekly. So this is very similar to what's going on in NASDAQ and the S&P. Whenever price is trading towards all-time highs, you definitely want to make sure that you are you're careful. It did technically sweep this high. I think we're going to blast through this, but again, being in the spirit of being careful. I don't know why my computer's acting so slow. Spirit of being careful, we do got to be careful, right? So that's ideally what I want to see the market tap. 38,100. 38.19 is the level that ideally, if we had a great ideal pullback, it would drop back down into this fair value gap here. We don't always get that on NASDAQ. And so someone asked me actually the reason that I like trading currency so much, and outside of it just being knowledge of me trading these markets for so long, I know that currencies are stable, right? Their price action is usually stable, and there's a logic there because there's these things represent real life price relationships between countries, right? So if the dollar just tanks and it just drops 1,000 points in one day, or something crazy, 6, 7, 800, 900 pips in a day, that has real world implications for exchange rates, and that has real world implications for are things that affect us in the day-to-day, right? And so NASDAQ could legitimately drop from 26,000 all the way to zero and then rebound back in an hour. And um, and nothing would happen day to day, right? Like nobody would really truly be affected day to day. But the market makers could use it as an opportunity to take liquidity, right, and drop all the way back down and have a flash crash and bring it right back. I'm sure somebody would get in trouble for that. I'm sure that legally that there's probably some type of law against that. But this stocks and indices have no value until you capitalize on them, right? They're just speculative value, right? And so you don't have any money. All the money you put in the markets is not really your money until it's sitting in your bank account. Really, honestly, with any trade, right? But when you're trading a market that doesn't necessarily have any value, it allows people to whipsaw things at a very, very rapid pace, right? And so I'm sure there's laws that stop people from doing these things, but it always does kind of make me a little bit nervous. The idea that currencies like at least have some buffer. And you see flash crashes in currencies all the time, right? Like not all the time, but like at least once a decade, you see something crazy, right? Where there's just a crazy drop, right, on currencies. If I were to go to euro, you could see, we had a month where the market dropped almost 1,000 pips in a month, right? And if I go back to like this is probably 2015. Yeah, this is when I first started learning how to trade, was in this. And then Brexit was, I think Brexit was this, right? But we had a few months of just the market just dropping and dropping and dropping and dropping and dropping, right? And so from July to 2014, pretty much to February of 2015, we were in this range. And I started learning how to trade in this. This is 10 years ago. And so, but there was a reason for this. It was Brexit, or Brexit decisions, I believe. And I think Brexit actually happened like a year later. And so that's why the currency got devalued. On NASDAQ, you could legitimately tank price, right? Like the market makers could legitimately tank this back to zero and then bring it back up to 24,000 in like an hour or so. And again, there's nothing to really like stop them from doing that, because none of this stuff has any value at all. But if I do that on euro, then all of a sudden, like every corporation that's moving money across their European branch and their American branch is going to get taxed way more or less. Exchange rates at airports are going to go bonkers. People are going to get less money for their dollar, right? Like, or more money for their dollar. And this has real world implications that everybody can kind of mess with. So there's a lot there. But ideally, when it comes to gold, again, I want to see the market continue to go higher. There's no range. There's not really a level that I want to see for this week outside of just taking out the all-time high. Again, gold has been on a run, and I've pretty much been calling this entire run. I just don't passively aggressive in gold. Some of these assets I need to like start long-term investing in and holding money. Gold, is something that I'm interested in too, just because it doesn't lose its value. And imagine if you would have bought gold back in 1975 when it was traded for $200, and now it's trading for $4,000. You bought $1 million in gold, you'd be up like 100 million or something like that right now. So, or at least 20 million, I think, something like that. So, I think that's all I got. So I'll stay on for any questions, but we covered NASDAQ. So dollar, ideally, I'm still overall long-term bearish on dollar, but I do want to see the market go higher before it goes lower. Euro is the opposite. I think long-term I'm still bullish, but I do want to see it go lower before it goes higher. I'm most confident about Euro analysis this week. I think Euro is very clean and clear, followed by maybe GBP, right? And then let me look at NASDAQ. Let me look at NZD and AUD, right? Because these are other currency assets that I've been kind of looking at over the past few weeks. I think we're still pretty much in the same space. Jump to the daily. Yeah, I think we're in the same space as we've been. right? So the market's been trading up. It's still bearish. It swept liquidity by taking out this low here, but there's nothing really here to stop it from going higher. We did trade in this overall fair value gap right there. If I jump to the 4-hour time frame, again, this is 6N1, which is NZD USD futures, or New Zealand dollar futures. But this looks pretty good to keep going short, right? We have this overall fair value gap here that we did kind of disrespect a little bit, but we've been wicking off of this and trading into this bigger one. Again, this order block here is also there. Again, when it comes to order blocks, I also look at consequent encroachment of these too. And I want to make sure that the market is staying above or below that 50% level, which it did. It came up there, wicked above it, closed, and then it's failed to do that a couple times. So I think we're good to keep going on with a bearish continuation. It's a little shaky right now. Again, the level that I'll be watching is the consequent encroachment of this wick right here and this one right there to make sure that we're staying below those levels. But ideally, if I had to project something, maybe I do think we're going bearish this next week. Maybe we run the high of this and go lower, but ideally I want to see the market stay below consequent encroachment of this wick. In the best case scenario, in the best case scenario, this will make me feel the most comfortable if we come up here, take out these highs, and then maintain the integrity of this wick by staying below consequent encroachment on a close. It can wick above here, but it needs to close below that. And then obviously this is like my fail-safe level. So if we take out this high here, then I'm just wrong for the week, and I'm okay with that. So that's what I want to see. AUD, probably the same, very similar setup. Yeah, this is really good, actually. AUD and Euro might be the strongest ones. So AUD really quickly, what I'm looking at here, market has broken structure somewhat. It's not a clean breaking structure, but we did run up and then break and go lower. Notice how the market traded into this fair value gap again, respect to consequent encroachment. That's beautiful to see. And then it, went crazy lower. Jumping down to the 4-hour time frame, you can see the market kind of do something similar where it respects these highs, respect the integrity of that consequent encroachment, and then goes lower, right? Break structure, right? Gives us a break in market structure, and then gives us a fair value gap right there, and it respects the consequent encroachment of that fair value gap. I like AUSD a lot. I like that a lot. Again, obviously this is not a trade advice. It's just my own personal kind of chart watching, but ideally long-term target is down here. And so ideally what I would like to see is the market really trade for, maybe gives us something else where it retests this high or that gap again, and then just kind of melts over the next few weeks. I want to see how the market will react to each of these levels of sell side here. So at 0.5757, that sell side level there. And then some of these gaps, right? There's a lot of liquidity in between. The market could stop at and turn around at. So this is what I want to see happen. So potentially us trading back up into this and then going lower. All right. And then I'm looking there too. So ideally you want to see the market maybe potentially retest this gap again and then go lower. I'd say my quote unquote fail safe is if we have a close above consequent encroachment, right? So for a couple of reasons. Right, the first reason is that we're trading above this high. we have broken structure the other way. And then obviously consequent encroachment of that gap is maintained. So a couple of reasons as to why this should want to keep going lower, but I do like this one a lot. I actually might like it more than Euro. So if I'm looking at trades for this week, yeah, I actually might like this more than Euro. So I might be looking at AUD and Euro together, right? Like those two are the two that I like the most, but this one's the most clear. As long as we respect this level here, these are relative equal highs, so I'm going to be looking here. We could sweep this, like we could wick above this and then close below it. That's okay, but I will be watching that too. But I think as long as we're respecting this, we should be okay, even with these relative equal highs. So we'll see what the market wants to give us tomorrow when it opens up, and then we'll see what's going on. So that's all I have as far as charts. I want to take you guys through the Forex Factory really quickly because I talk about this every week, and I'm going to do this, and I never do this. Tony, what's going on, Tony? He said, Coach, your analysis has been on point. I appreciate that. I appreciate it. Bless you. Shout out to you. It's gonna be, you're gonna be trading like this in a second, man, too, man. Hopefully that's the goal. Or at least I can't promise that, but like hopefully you can at least read the charts like this. So have the same type of analysis. So October 6th, 2025, we have a couple of news on Euro and GBP at 1:30 p.m. So that could be something to watch out for. Again, I tell my students that I do not trade on non-NFP or FOMC weeks. I don't trade on Mondays. So I don't really try to do anything. FOMC meeting minutes. Is this FOMC or is it just meeting minutes? I'm trying to remember. Yeah, this is FOMC. What the heck? Why is FOMC so early in the week? Or early in the month? So this is FOMC week. Dang, I didn't even realize that. So I guess I will be trading on Monday. And non-farm all in the same day, on the same week. This is ugly. What's going on? Let me go back to the last week. Wasn't non-farm last week too? Am I tripping? Oh, bro, non-farm was not last week. Am I tripping? What? Wow, non-farm was not last week. So I apologize to everybody that said that non-farm was last week. I messed me up last week. I went into last week thinking that non-farm was last week. Wow, so I apologize. I really kind of messed up my trading days. I could have traded Thursday and Friday and whatever though. But I was still dealing with the whole FTMO situation and kind of like the restriction, not the restrictions, but the 1% thing. So whatever, it doesn't matter. I guess this week is non-farm and NFP. Unless it got pushed back, maybe. Does anybody know if non-farm was supposed to happen last week and it got pushed back? There you go. There you go. Okay, so I went to the comment section. Okay, government shutdown. We will not have that data. Okay, that makes a lot of sense. So really, they're going to keep moving non-farm back until the government's open again. Okay, that makes sense. So I guess I don't like this, man. I don't like the fact that non-farm is going to keep getting pushed back until we get the government open. So I guess I'm going to be playing it by ear. So I guess whoever brought up the government shutdown piece was actually right. Until we get the government shutdown, I'm going to be kind of careful. Dang, I did not know that. This is probably there's been other government shutdowns, but they haven't really interfered with my trading. So, okay, well, yeah, government shutdown blocked it. Okay, that makes sense. So I wonder, FOMC is probably the same thing then, right? Or was FOMC last week too? I'm trying to remember now. Was FOMC last week too, and it got moved? I'm trying to remember. Does anybody remember that? If not, whatever. But yeah, I guess I'm gonna be treating each week like FOMC week and NFP weeks until we get some type of movement, which kind of sucks. So yeah, I probably will lower my risk on actual funded accounts and like personal accounts. I'm not really trading as much personal right now, but the funded accounts that I have, I'm gonna probably be a little bit careful with those, especially with again with the announcement or the email that FTMO sent me. So I'm just trying to make sure that I'm staying compliant with them. If it's a different prop firm, I might open up a couple other ones with a few. There's two other prop firms that I'm looking at that are on the CFD side. I keep seeing CFD, but like the forex currency space, and maybe I'll trade a couple of those and kind of be a little bit more aggressive there until I'm told that I gotta dial that back. So I guess that's what I'm shooting for. So, but yeah, if someone knows that about FOMC was I don't know, I'm trying to remember if it was supposed to be last week too, and it just didn't happen. I do remember the NFP week was supposed to be last week, so I don't remember if both of them were supposed to happen. Um, but dang, I did not pay attention to that, and it makes total sense. I just, again, I get tunnel vision, so sometimes I'm not thinking about everything. But yeah, the government shutdown obviously would affect. But I know the Fed share is not like FOMC is technically the Fed committee is technically not part of the government. Like they are an agency, but they're not actually the government themselves. I don't know how it works, but exactly. I'm trying to remember how it works. So they might still have the meeting, but again, if someone can drop that knowledge in there, and maybe I'll go back and watch last week's video just to kind of remind myself. But yeah, so that's what I'm gonna be looking at. I guess I'm gonna be taking things day by day. If the scenarios present, then I'm gonna take them in. If they don't, then cool, whatever. Just keep waiting until this happens. Obviously, these government shutdowns don't last forever. So I'm sure they'll have something figured out probably in the next week or so. So, dang, with that in mind, yeah, I guess be careful this week. If you guys have any other questions, I'll stay on for a couple minutes. But then, obviously, this is the part where I offer and talk a little bit about Talented 10th. So again, Talented 10th is my community, right? So one of the benefits of day trading for a decade is that I do have a lot of insight when it comes to the markets, things that I'd like to see play out. And it's more about, trying to see if I'm right or wrong in the trade, but just seeing if the things that I'm projecting are playing out. And if they don't set up, then I'm not taking the trade, right? And so understanding all of that and not just chasing the market moving up or down is a skill that you learn over time, right? And so one of the cool things about being someone who's been in this space for a decade is that I have a lot of insight to that stuff, right? And so what I do is I share a lot of that with my community. Again, so talented10trading.com is the mentorship community that I specifically teach on. And so if you guys are interested, you can join the free Discord, right? And that's a free Discord that takes you into the community where you can stay in the main chat that I kind of showed earlier. But then also we have a mentorship chat where you get access to 30 videos. There's more than, I think it's like more than 30 videos at this point, but there's a ton of videos in there that teach my entire strategy, how I see the markets in and out, as well as like a mentorship chat where we break down everything that I'm talking about and looking for on a week-to-week basis. So it's a lot more detailed conversation on what's going on. Did not mean to do that. So it's a lot more detailed than what we talk about. And I call it the lab, but basically in here is actually projections that I want to see how things are playing out in response to the overall projections that we had. If we take any trades, I didn't take any trades last week except for the 2 trades that pretty much brought me back to break even. So there's really no progress last week. The markets were just really choppy. But when we're talking about like managing positions or getting into trades here, like you can see there's a couple of trades that I were taking on Euro. These are challenges, right? All these things that we want to see, right, when the market's playing out. This is exactly what I'm looking for, right? And I break this down pretty much, and give people that understanding. Because again, it's one thing to learn a strategy, right? You can understand, someone could teach you how to trade, but if they don't teach you through every scenario or setup that you might see on a day-to-day basis or week in, week out basis, you are probably going to like fail. So I just want to make sure that everybody has that stuff and they're able to maintain that. Oh, I don't even know how to pronounce that name, but someone says, yo, Branks, can you take a look at oil, please? Looks let's look at oil. I don't trade oil. So I said this. I think someone asked me to look at oil last week or a couple weeks ago. So let's look at that. Do I have oil already out? Or is it, what's the code for oil? Does anybody know? Is it, I'm trying to remember what oil is. I already have one. I thought somebody asked me to do this a while ago. Oil. Is it you? Sorry guys, I gotta pay for my TradingView subscription, so I don't have TradingView like the premium plans anymore. I think I got a new debit card and it just didn't transfer over, so I can't even pull up anything extended. So yeah, I can't do oil, sorry. And I have a MacBook, so I can't pull up like MetaTrader on here. So I will if someone drops a screenshot of oil in the chart, or actually here we'll say this. If you guys go to talented10trading.com, join the Discord, if you're in the Discord, whoever this person is, put in the general chat that you want to see an oil breakdown, and I'll do it on my phone and upload it to the chat. But you got to be in the Talented 10 Trading Discord there. So I'm going to drop a link here. Right, and if you're in the Discord, cool, just message the general chat and say, hey, Briggs, I want the oil breakdown, and I'll do it on my phone. I'll throw it in there. But I can't pull it up here. So sorry, guys. But all right, guys, I'm going to let you guys go. Hopefully everybody has anything. Hopefully you guys have a great trading week. Hopefully you kill it in the markets this week. Again, I'm trying to get to YouTube. I'm trying to get 300 followers on subscribers on YouTube. So if you haven't subscribed, subscribe. Tell somebody, tell a friend to tell a friend, right? Because I'm trying to get there. And then follow me on all social media at Briggs Trades. I'm trying to get those numbers up as well. And yeah, we'll follow up next week. Hopefully by this time next week, I have a good story for you guys about passing or getting closer to passing that second 100K challenge, right? And getting funded. Obviously, I'm funded, the 100K, but getting funded 200K before the end of the week or month. And, maybe I'll have some more stories for you guys. So have a good one, and I'll see you guys next week. Peace.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, if you like futures because of the tight spreads and clear setups, go check out Blue Guardian Futures. They let you start trading futures with up to $450K in funding. The best part, you keep 100% of your first $15K in profits, then 90% after that. No activation fees, weekly payouts, and they're sponsoring Chris Eubank Jr. and Birmingham City FC. Go take a look at blueguardianfutures.com or click the link in the description.